What's going on, guys? Bryant here. Today's video is a little bit different from anything in which I've done on the channel before. We're going to be reviewing Friday, September 10th, 2021. We're reviewing the Quant Trading App Algo trade ideas for Friday. Full disclosure, I am a developer for the algorithm at Quant Trading App, but the results on Friday blew me away. Now, we've been aware, any of the members for Quant Trading App have been aware of this for the past couple months. However, I've never done an extensive review in which I'm about to show you guys today. This is the Quant Trading App website right here, so we'll be taking a quick, brief overview to this, and then we'll also be looking at the results for the trade ideas that came out from that day. So there were 7 tickers. We'll be evaluating, trading the options, how much money would have been required, and how much profit would have made by the end of the day, just trading every single ticker that it said and buying one at-the-money option for each ticker. As you can see, the expectations in terms of the capital requirement were actually not that ridiculous, and especially considering how much profit was generated by the end of the day. Jumping right over to the Discord for Friday. Again, mine was blown at the end of the day for the results, and that's why I decided to make this video. Normally, we have these results every Friday, but I'm never super inspired to do videos like this, just showing what we have in the Quant Trading App group. But this was a little bit of a special case here, and as we can see, this was pre-market on Friday. This is exactly what's posted in the Discord. It comes straight from the website. All the members have access to it. I just post it in the Discord just in case anyone doesn't have time to check it pre-market and to make it easy for everyone. What we have right here, just a brief breakdown, is this is the price target. So this is the ticker. This is the current trading price. This is before the market has opened. So this is essentially saying the gap. And the algo has a proprietary way of ranking each ticker based on its strength. So what we can see here is there was a bearish target for Boeing, and this is its strength. So the lower this number is, the more confidence it has in its bearish targets. As we can see right here, Tilray had a bearish target and its strength was a 14. That's very low. So in other words, the algo is saying it's very confident in Tilray selling off today. And on these two tickers right here, these were the only 2 bullish trade ideas in which it had for the day. We can see the Qs had a bullish target, but its strength meter was only 51, whereas Zoom had a bullish target also, but its strength was 58. So it was a little bit more confidence in being bullish on Zoom as it was as opposed to being bearish, as opposed to being bullish on the Qs and so forth. Anything around 50 is pretty much, it's kind of neutral, but it's slightly bearish and so forth. Tesla also very bearish on it with a strength of 33. This was its bearish target. But as you can see, Tesla during pre-market was trading at 760. So when I saw 735, I pretty much ignored this because I was like, there's no way Tesla's going to sell off that much. But you guys will see towards the end, we're going to be looking at a little bit of technical analysis. I'm just going to glance over all the charts. I have a screenshot of all the options. I'm pretty excited to share with you guys. If you're into data, this should be pretty fascinating for you, especially seeing how certain algorithms work. If we jump back to the charts, just to paint the picture, if you're watching this video, a few months down the line or sometime in the future, I just want to provide some sort of context. To what the market is currently looking like. We have been in a very strong uptrend, as we can see right here, and we just started getting a little bit of selling pressure that's been coming in. Now at the open, the market was actually up here, so it did not look this bearish. However, a lot of people were able to sense that things were not feeling right in the market because there's a lot of catalysts that's coming up. We have quad witching next week. We have a huge FOMC meeting that's in 2 weeks, which will be the 22nd of September. So the 21st and the 22nd are 2 very important days, and then there's just a lot of catalysts. September, the market is expected to sell off in XYZ. There's a whole bunch of speculation around the time right now, and there's a little bit of uncertainty, so the market is a little bit spooked, and that's what's going on. If we look at the NASDAQ, we can pretty much see the same thing. We've been in this very strong uptrend all year long. These are daily candles, by the way. And then at the start of the day, we were all the way up here. And as you can see, we ended up selling off. If we go intraday, again, trying to keep the technical analysis very limited because I want to get straight to the data and I really want to show you guys the options and the power of options. But let's just glance over things again, just trying to provide context for how price action looked. We had a very tight range on the NASDAQ and we had a gap up right here. This is pretty much what we call in the algo. The levels that you see on this chart are provided from the algo. It's drawn on the charts. It's letting us know where price is likely to close on a Friday, and it's also telling us most likely where we should bounce. So in other words, potential support and potential resistance. The gray area that you see on the chart is for intraday. So it generates these levels based on the day of the week, and it's calculating previous price actions and so forth. This is not the same as the price target that we see right here. So if we pull up the Qs, you see it had a bullish target of 383. It was at 380 pre-market. If we jump back to the chart, we can see right here, we were around here at that time at 9:15 when I posted the pitch. I don't have pre-market data turned on, just trying to show you guys the price action during the open market session. So we were around here during pre-market, and then we gapped up. By the time the market opened, we were actually here. The algo had a price target of over 383. Coming up shortly, I actually have the strike prices that the algo chose on the chart, but for now, this is a very clean chart. Just wanted to show you guys the price action. Wanted you guys to get familiar with how the algo generally works for us on a typical day. Aside from the trade ideas, we have these every single day, and we also have this every single week, new levels that are generated here. And what we can see is there was a lot of selling pressure. The gray line on my chart is VWAP, and this line right here is what's known as the 2-day anchored VWAP. This is also generated from the algo. Very clean price action. We had a nice sell-off, came right down to our zone, and then it bounced, and we had a retracement right to this level here before we had another sell-off. If we draw a Fibonacci on the chart, we can see it was a nice 50% retracement in confluence with VWAP and the 2-day anchored VWAP and the 50% retracement. A setup that I really like looking for, as it's usually very high odds. And if price was to hold over this level, it would have been a clear signal to go long and put a stop below VWAP. Now, I made sure to draw a line on each chart showing exactly what the opening print was. So in this particular case, the blue line is exactly where the Qs opened up on Friday. So we opened at $381.23. The gold line up here, the dash one, and this will be the same for every ticker in review, is saying that the Quant Trading App target was $383.72. That level comes from this right here, $383.72. So that's the bullish target that the Qs had. You guys can already see it did not hit its target. It would have had to come up here. It actually ended up failing. So you guys can see how that one ended up playing out. If we move right along, this is the SPY intraday. These are all 5-minute candles. So when we're looking at anything intraday, it will be a 5-minute time frame. The SPY also gapped up with the Qs, but then we ended up selling off. Again, just trying to provide some context to what the market environment was looking at. One thing I want to point out, if we jump back to the Qs real quick, this is known as relative strength. As we can see, the Qs was actually a little bit stronger this week as it was holding up. This is its midpoint between here and its buy zone. So it was relatively strong coming into the week in relation to the SPY. As we can see on Thursday, the SPY was already very weak. It had almost come down to its buy zone. So we know this to be relative weakness. So technology stocks were actually holding the market up coming into Friday. So moving right along, the first ticker on the watch list was Boeing, and this would be Boeing right here. So this is where Boeing opened, and this was the Quant Trading App short target. So 209.96. If we come right here, 209.96. Pre-market, we were at 215.50, and by the time we opened, we were at 215.16. So this is exactly where Boeing opened. As you guys can see, just spoiling the results, moving right along. Boeing ended up selling off and coming pretty much straight down to the target. It missed it by less than 25 cents. However, if we look back a couple days, so during the pre-market on Thursday right here, because this is Friday, we can see, so the algo generates the levels actually from Thursday morning, but then it's very accurate on Friday because it's pretty much telling us before the week is up, this price is very likely to be hit. So we can see right here, the price was actually touched during pre-market on Thursday. So it was not a main watch for me, which is why I didn't even bother to trade Boeing, because sometimes once the level is touched, I pretty much say, okay, it's already done what it was supposed to do for the week, and I don't count what happens during pre-market or after hours usually. But in this particular case, you know, we have 7 different trade ideas, so I'm trying to pick which one I actually want to trade because I can't trade them all, at least not yet. Next, we're looking at Google. Same situation. This is where Google opened, so 29.08, and this was its target, 28.68. Google 29.08 and 28.68 was its bearish target. So as you guys can see, Google opened, it looked pretty okay. Nice tight consolidation, but it had been consolidating all week. We can see right here we had previous resistance for the week. It actually poked over it. It poked over it, actually closed up here, so this looks pretty good. And out of nowhere, it just got really disgusting before it ultimately just dropped, and it came straight down to the Quant Trading App target, which was crazy to see. Next, we have Roku. This is where it opened. At this point, I think you guys pretty much get the gist of it. The blue is where we opened, and the gold is where the target was. You can always just pause the video or rewind it to see this page right here, so I don't have to keep swapping back and forth, but you can see where we opened, where the target was. So now I'll just jump to the next ticker, zoom. This is where we opened, and this is where the target was. So now you guys can see, obviously, Obviously, I took a screenshot after the market closed so we can see what ended up happening. But next, let's just start looking at some of the options themselves. Here goes Boeing. And what we have here is the 0-day at the money option. So buying this option right at the open would have costed you $1, and buying it at the open, again, not trying to look for a particular setup, just getting right in as soon as the market opened, this contract dropped down to 80 cents. So the contract lost 20 cents in premium. If we jump to the spreadsheet that I showed you guys a little bit earlier, that's what is exactly written right here. The 0-day at the money option was going for $1, so it would have costed you $100 to buy one, and we can see the low was 80 cents. So our drawdown would have been 20% right here, and that means we would have been down $20 before ultimately by the close. This is how much we would have been up, $365, which would have been a 365% return on your investment, which is the exact translation right here. So at the open, your drawdown, and then by the close, 465 is where it closed at, just so you guys can see it's all written in data, but I figured it would be cool to be able to see this. Now, on this chart here, you guys will notice it says a few places to take profit. So just so you guys can understand this right here, we have taking profit at the intraday zone. I'll show you guys what that means. There's taking profit at the QTA target. So the intraday zone is different from the Quant Trading App target. The QTA target is on Fridays. That's straight from the list that's straight from this right here. So this is the QTA target. What we have right here, this right here is what we call the intraday zone. So this is a level that we have daily, regardless of Friday's 0-day plays. This is the intraday zone. So if you see anything that says taking profit at the intraday zone, it's here. So it's different from this right here. So in other words, this is the more realistic, the safer, target that we would take on any given day. If you're short at the open, we know to just take profit anywhere around this area. So that's the difference between the intraday zone and the Q2A target. And then obviously we have the close, and obviously the profit for taking profit at the intraday zone is going to be less because it's a profit target that comes much earlier. It's much safer, and that's the difference that you see on this chart, as well as if we come over here. So buying all of the at the money options at the open, if I were to click this just so you guys can see the formula, I'll press this right here. This right here is the formula. What it's doing is it's adding the $100 plus the 568, which would have been one at the money option on Google, one at the money option on Roku, and so forth. You add all those up, and that's exactly how much it would have cost, $1,600. The same thing if you bought one of the out the money options. So if we just press this right here, just so you guys can make sure, this buying the out the money option on Boeing would have been 9 cents, so it would have costed $9. This would have costed $118 right here, and so forth. So it adds all that up, and that's what's showing you right here. So you guys can already just understand that. Again, pause the video if you just want to see this right here. If you want to pretty much just get the results without watching the rest of the video and seeing how each individual option moved, this is the results right here. Buying the at the money option would have made 10 grand if you just bought one of each without trying to pick or select, which would have been a 648% return of your investment. Pretty much you would have made 6.5 times how much money you invested, which is nuts. The drawdown would have only been 29% of your investment. So in other words, the $1,600 investment, at most you would have been down $479 at any given moment. Same thing with the 0-day out the money options. It would have cost $220. You would have made almost 15 times your money by holding my close, which is insane. Max drawdown 60%. So $133 you would have been down. Obviously, this is the least capital intensive option to go with if you're trying to execute something like this as a trading automation, not trying to pick which strike price. Just let an algo, just let a bot take the trades for you. This might be the safest one here, but we'll revisit this shortly. Jumping right back to the chart, we can see by the time we hit the first target, already up 180%, which is nuts. Again, very painless trade. Drawdown from a risk reward standpoint, it's definitely worth it. Moving right along, this is using the Quant Trading app as the strike. So in other words, the strike selection here would be the 210. This is the 0-day option. 210 because the Quant Trading app target was 209.96, so just rounded it to 210. So buying this option at the open, this was going for 9 cents. And as we can see, once we hit the first target around here, the option was up 199% roughly, so an increase of 18%. So this is now, you guys at this point should be pretty familiar with it. The blue again is where the option opened, and it's in confluence with where the open was right here. If we just skim right along, this is next week's at the money option. So buying the strike price, if this is where we opened, buying whatever was the at the money. So the 215 put at this time would have been the at the money. At the open, it would have cost $337. Max drawdown was 22 cents. So $22 on a $337 position is not bad at all. This is by the time we hit the first target right here. And then this is holding until close, which would be right down here. You can see by close, it would have been an increase of about 85%. And moving right along, here is the QTA strike, which I'll also refer to as the out the money. Since this is not the at the money option, this is going with the 210 put. So 210 put, and this is where Boeing was at the open. So obviously this is pretty far out the money, but it's next week's expiration. So it's a little bit safer of a contract to trade since it's not going to lose all of its value in the same day. What we have right here is at the open, it would have cost $152. And as we can see, the drawdown was pretty much non-existent. You're talking about a $2 loss on your P&L. So 2 cents loss on the option means you're going to be down $2 on your P&L before being up 60%, roughly speaking, by the time we hit the first profit target here, and holding it until close, 120% return. Now let's look at Google, which is very impressive. This is the 0-day at the money option. It would have costed $568 to buy this one. At one point, the drawdown would have been almost half, so you would have been down $279. So this option holding throughout the day, obviously because of time decay, it's Friday. But then by the time we hit the first targets, out of nowhere, as we cracked, we broke the low of the day or the opening print. There was pretty much a bid flush on Google. We hit the QTA targets, which was right here. And then by the close, this contract was actually going for $72 because the entire time it was pretty much in the money. The moment we broke down below the open, since that's the benefit of buying an at the money option, obviously. So you can see this was the 29.10. Google opened at 29.08. So you're pretty much buying this option. Any dollar below here is $1 of intrinsic value. So this is just nuts to see. I could not believe it. We swipe back to the Discord. You guys can see right here. I was just completely floored. It was just yeah, at this point it was, I didn't even, to be honest, the pre-market, I wasn't even aware that the algo was bearish on Google. It had just been such a strong stock all year long, so I wasn't really looking for shorts on it. But I think the puts at one point were pretty much up 5,000% from the lows, which was just nuts. I was looking at some ridiculously cheap options, which we'll look at right now. So this was the Quant Trading App target. So using this as your strike price right here, so 28.70. Using right here 28.70 as your strike price, we're talking about options going from the lows 55 cents all the way up to $32 by the close. That is just insane. If you catch any type of fill below $1, I mean, this again is not normal. This is not something you should even build your trading strategies around, trying to catch this. But it's just showing you, I just want to show you guys the opportunity of when you have some sort of an edge in the market, if it's an algorithm or if you have some sort of system for looking for plays like this. But these are some of the best results in which I've seen. And the algo is right more than 50% of the time. So if you know, as a trader, having more than a 50% win rate is excellent, especially when the risk reward is this great. Buying one contract, you're risking $118 to make over 30. So over $3,000, $100 to $3,000 is just mind blowing. Now the next week at the money option, $22. By the market closed, $73. So almost a 250% increase in P&L. Obviously a much more costly option to go to, but a little bit safer because it's not going to expire in the same day. Here goes the Quant Trading App target. So the out the money option at the open going for $11. By the close, $46. I'll speed things up right now. Here comes the Qs. Again, it was bullish on it, so it did not. This was the only loss of the day, or the only ticker that actually didn't go in its direction that it was supposed to, or didn't come close to it. So at the open, buying the at the money option would have cost 85 cents, but however, at one point you would have been up almost 50%. Market close, you would have lost all of your money, but you're talking about losing $85 because we're only buying one. If we go to the at the money target, right here, that means this is the at the money, so 283.72. So the strike price is 383, just matching it up right there. Would have costed 22 cents, so $22, and by market close you would have lost it all. These are the next week options. At the open, $244. By market close, it was only going for $106, so a loss of $140 here. Not too bad. This is next week out the money. At the open, about $150. By market close, you would have been down about 83 bucks. So also not bad, especially considering how well Google is already going. Here comes Roku. Roku opened at 4:30. The at the money 0-day option opened at 221, and by market close, it was going for 12 bucks. When it hit the target right here, the contract was going for $8.70. So you're talking about an increase of almost 300% to 450%. We'll just round this one up using the averages, which again is another amazing win, especially considering this option had essentially almost no pain because the theta crushed this option overnight. So just marketing in, assuming we're also making the assumption here you get the first print of the day, which we know is also not realistic. More than likely you're getting filled probably around 240, 250, so these are idealized circumstances, again assuming you get the exact open print, which is what I'm using here for the spreadsheet. If we jump to the Roku out the money strike 0-day option, opened at 34 cents. In this particular case, we can see it struggled because it was a 0-day, and at this point, even if Roku closed here, it doesn't matter if you were in puts, this contract would still expire worthless because it needs to go in the money because it's a 0-day. It needs the intrinsic value. So that's why this option all day long was pretty much struggling, and by the time it actually hits the first sell zone right here, the option was going for, you're up like 18%. So you're up $6 on a $34 contract. But however, by the time we actually did start dumping and actually closed, we can see we ended up closing with a 460% return. Again, holding until close. So this is the difference with when you go with a 0-day versus if we just jump forward to the next week. This option is not going to lose on the time decay as bad. So even though if we see here, this option was cheaper than it was at the open, even though Roku opened here, and by this time Roku was all the way down here, the option was still struggling. That's just the risk that comes with trading 0-day options. Here goes the next week out the money. So comparing the 330 put, which would be, this is our strike price right here. So the 330 put next week compared to, look at the P&L. At the open, $467. Before Roku broke down again, this contract was going for around $6, $6.50. So you're up even though you're holding this contract all day. And jumping back to the 0-day, we can see holding this contract all day, you're just slowly bleeding out and losing your profits. So that's why I like to trade the following week if I'm going with the out the money option. Nonetheless, we can see by market close, this contract was still up almost 100% right here. So you're talking about the contract going to $9 when you bought it at $4 and change, just buying it at the open. We'll skip over Tilray for now just because it's not that most exciting. You guys can see it did work. Here was the open. It did hit its target. We're talking about options going from 19 cents holding till close to 59 cents. So an increase of 200%. But again, Tilray is such a cheap stock. You could, if you can just short the underlying, you might as well, because you have to buy so many puts here to make this trade even worth it. Not to mention the liquidity. Here's the out the money target right here. So this is our strike selection, $12.50. It opens pretty much at $13. So we're talking about a 50 cent drop in the underlying. Buying these contracts for 4 cents, which is $4, and it went all the way up to 11 cents, which is $11. So $4 turns into $11. Not super exciting. You'd have to buy probably 100 of these to even make it, really worth it. But then you're spending so much in commissions. So next week, 53 cents at the open, by the close, 84 cents. Here goes the out the money. Open at 29 cents, close at 59 cents. Now we have Tesla. Tesla was the exciting one, I have to say, because it opened again pretty much 760. The Algo said the target was 735 for today. You guys can already see the price action. This blew my mind. I was in disbelief the entire time. Even if we come back here, Nick, a member in the Discord, he was the one that actually said he actually took Tesla, but this was early in the day. Does it say the time? So shortly after, sometime between 9:48 and 10 a.m., he says Tesla to 735 today. And my first response was it would be hard to hold all the way down to 735. I said there's just so much structure in between where it currently was and its bearish target. I generally don't trade the algo if it gives a target like this, and there was so much support on Tesla. So even that's why you can see consolidated here, because the previous days price action for the week, there was a lot of support. Not to mention here was 750. 750 was a very strong psychological level for Tesla. And then there was also the Quant Trading App intraday zone right here, which we know is usually a profit target where price reverses. So we had this level, 755, 754. We had 750, which was a strong psychological level. We had the intraday algo level, and then all of a sudden there's this 735, and I was like, there's no way we're getting down here. So I didn't really pay attention to this, not to mention it was consolidating all day. So it was a boring, thing to be paying attention to. There wasn't a lot of volatility in Tesla in comparison to some of the other tickers. Google and Roku had already sold off for the morning, or they had already started selling off much earlier than Tesla did. But what we can see here is buying the at the money put on Tesla, which would have been 760. Tesla opened pretty much at 760. It would have cost $355. The drawdown was only 95 cents. So you're talking about being down $95 on a $350 position. When it first hit its target right here, you were already up 280%. So we're talking about a $10 increase, pretty much up $1,000. And by the market close, which was just mind blowing, this contract was deep in the money, so almost a 600% return, 21 points on the contract. $350 turns into $2,100 by market close. This is amazing in a dream case scenario. Now let's look at the out the monies. We're going to look at the 750 first, because even though the algo would have chosen 735 as a human, I chose this as the adjusted strike price, because a machine or a bot would have probably chosen this just because that's what it's programmed to do. But there was a lot more liquidity and open interest on the 750 put. So this is the one a human would be most likely to select. And as we can see, this contract opened at $1. The max drawdown was 45 cents. So you would have been down $45 before this contract went all the way to 15. It ultimately closed at $14.25, because at this point, once Tesla broke down below 750, all of this was just intrinsic value. And this is just a dream scenario. This is the definition of a lotto ticket on a Friday when you're trading 0-day options, buying something for $1 and saying, hey, I'll just hold it till the close, and you end up making $1,300 on one contract, and you're not really expecting this type of play to necessarily happen. If we look at the QTA target, again, this would have been the 735. We can see how this traded. It would have only costed 28 cents to purchase, but then it hit a low of 2 cents, which at this point you're thinking this is pretty much worthless. And then we can see it had this parabolic move, increasing 255% to hit $1 during the sell-off. But ultimately, this contract pretty much just closed right where it opened, because it had just a little bit amount of intrinsic value here, and I'm pretty sure it was actually worthless during the extended hours, as the last print was 736.24. Here's the next week at the money. It would have cost $12.75 to just buy at the open. No drawdown here. And as we can see by the close, it was going for $29. So an increase of over 120%, which is excellent. But I want to show you guys something right here. We'll take a look when we look back at the the spreadsheet as it's easier to compare. This is nice to see visually, but I want to show you guys certain things in a few minutes. Next, we have the out the money. This was the 750. So again, the strike price that we would have been most likely chosen, as opposed to going with the 735. But here we have right here, opened at $10.75. Drawdown was $124 before ultimately being up $11. So all of these, we're talking about at least 1 to 8 are risk reward on almost every single trade here, which is again mind blowing. And this is a contract that I like right here. So this is the next week, using the out the money. It would have opened at $7.40. It opened at $7.40. Drawdown was only 23 cents, and by market close, it was up $8. So this is an excellent contract to trade because again, there's no risk of losing it all in one day. Here's Tesla's chart zoomed out. As we can see, this was where we have 750. This is the 750 area in which I was talking about. So we had support here. We can see a lot of consolidation here. We can interpret this as a potential demand zone that was right here. We had this zone right here, and then we had this pivot area right here, and Tesla did not care about all of these support levels. It just came right down. What we can see right here also is there was a gap. So from here to here, there was a gap, and it didn't even really fill the gap. I could not understand why it just came right down here and stopped. But again, that's just the way algorithms work, and that's just the way the machines work. Price tends to pivot at these random places sometimes, and you have to go probably so far back in price action to find a reason for why it decided to stop right there. And finally, the last ticker, this is the one that I actually traded, was Zoom. Here goes the open. Here was the target. So as we can see, it did not actually hit its Quant Trading App target. So buying the at the money option, which was going for $2.55 at the open, this is the 0 day. We can see as price ran straight up, we hit our first target right here. This is actually where I took profit, not on this contract. We'll take a look at my contract pretty shortly. I traded a 305 call, but I did take profit right here. Again, being aware of the SPY was selling off and the Qs were selling off, I did not want to hold a bullish trade for too long, especially when I felt that this was pretty far away as a target. Now, if it was a strong day in the markets, then maybe I would have held for all the way up here, but still a nice return on buying the at the money. It's pretty safe buying the at the money in this particular case because you know you're going to end up with some sort of intrinsic value at the end of the day if the algo is right, because essentially algo is picking if something is going to go up or if it's going to go down. It doesn't always necessarily mean it's going to go all the way to the target. If it hits the target and you're actually in the trade, that just means you're making a whole lot more P&L. But for the most part, all you need the algo to be, you only really need the algo to be right in its direction if you buy an at the money, because it means, again, you're going to end up with some sort of intrinsic value as long as the stock moves more points than what you paid for. So if you buy this option for $2.55 and Zoom opens at 296.90, you pretty much need it to go more than $2.50 by the close in order for it to be worth something. As we can see, Zoom opened here and it closed here. So that's why this option ultimately ended up closing with some intrinsic value. Even though you could have gotten a better exit, it actually hit $11 at one point. For data purposes, I'm using it as if you held it all the way until the close, or if you took profit right here at this zone. So this is how the at the money worked out. This is the strike we would have most likely chosen, and this was actually the strike I chose, which was the 305. Again, decent open interest and volume, so there was nice liquidity, was able to get in and out. My fill was about 35, and I was out once it hit over $1. I generally like to sell options at $1. It was actually in confluence with right around here, so I took a lot of risk off, and then I held the last piece for if we broke down below VWAP, which was right here. Because if you're trading this option on 0 day, you need Zoom to close over 305, and in this particular case it didn't, so this option was worthless, and that's the risk of trading the same day expiration. This is the same day expiration that the QTA target chose, so this is if we went with the 310 call, and you guys can see at the open this thing was going for 5 cents and it went to 30 cents. You're talking about a 600 something % return if you just bought it right at the open. Again, very unlikely that anybody would have did this, and if you did, I'm pretty sure you're not going to buy with a lot of size. No one's going to buy 100 of these at the open. But if you did, hey, and you got lucky, this was a lot of P&L that you could have made from a scout from here to here, and it's pretty painless. This is a 1 minute time frame, by the way, for all of the options. This is the next week at the money option. So opened at $7 and at the targets was going for $11, but by close was going for $10.52. Talking about a 44% increase. And this would have been the 305. And this is the 305 call for next week. So this strike right here, the same strike that I chose, but just not the 0 day. So you can see by market close, this contract was up almost 40%. Purchase at the open, $3.70. By close, it was going for $5.17. So this would have been a win versus buying the 0 day and holding it until close. It actually ended up being a loss. And then we have the next week out the money. So next week, 310 call. The open was $1.93, and by close, it was going for $3.33. So a little over 70% return on the investment. So now that you guys got to see every single strike, what we just looked at is every single strike price listed on this list right here. And now we can appreciate this table right here, and you guys can see the Google option now. The return on the investment for the Google option was over 1,000% just holding until close, which is mind-blowing. Even the out the money, $118 turned into by the close $3,000. If we look down at Tesla, the one that was pretty impressive, buying the at the money, which costed $355, by close was going for $2,000. So you're talking about almost a 600% return on your investment. And all you had to do was just hold, being down 95 cents or $95. Pause this video if you really want to dissect this spreadsheet right here. I'll leave a link in the description down below so you guys can actually pull this up and take a look. I don't know how much value it might serve to everyone out there. If you're interested again in Quant Trading App, the links will be in the description, but just know that we get these levels, we get these trade ideas every Thursday and Friday. Right now, as a quantitative trader, I'm just trying to figure out what's the best way to really capitalize on the profit that can be made, because as I showed from this list, I actually only traded Zoom, and the only contract in which I traded here was this one right here, the 0 day till expiration adjusted. So I put adjusted because this is saying this is for human adjustment. So the only ones on here would be the Tesla, because the Algo would not have chosen the 370, of course. And of course, when I say Algo, I mean an automated trading bot, because obviously the Algo is the Algo, but it's not actually executing any orders currently unless it's programmed to actually choose the option that has the highest open interest and highest volume, which is something we tend to do as traders right now as humans. You know, we like to go to the options chain and choose our strike prices based on that most of the time. So aside from these four, and that's why I made it gray, so it's pretty easy to spot. Anything that's highlighted green means it was the one that had the highest return on profit for this underlying. So in other words, for Google, the highest P&L from this list here was this one, so that's why I highlighted it green. From this list here, this one was the one that returned the most, and then this one here. So that's what the green means, and the red means it was the largest amount of money you would have been down holding. So that's why it's red here. So that's what the colors mean. And then if we scroll right here, what we can conclude from all of this is, if you don't want to put a lot of capital out there, this is something we already know. You can just buy one of all the 0 day out the money options and kind of hope for the best. Know that you're going to get the highest potential return, because obviously if you put this $1,600 right here, if you put the same $1,600 into this set right here, so instead of buying one of each, if you allocated your funds and divided it up evenly between all of the 7 tickers, and you ended up with the same return, you would have made a whole lot more than $10,000. Yeah, so I think putting the same amount of capital in the in the out the monies would have yielded about over a $20,000 profit. So obviously the return here is going to be the highest, but you kind of have the same percentual risk. You would have to hold, the $1,600 here. You're only down 400 and change. But if you put the same $1,600 here, at one point you'd have been down over $1,000. So you pretty much have to accept the fact that you're risking it all. So I wouldn't by no means encourage this. Nothing in this, by the way, I'm encouraging anyone trade this way. I'm showing you guys simply the thought process between how a machine would trade this based on how it's programmed to do. which is ultimately a goal of mine in a year or 2 years time, because I'm currently right now trading using what the algorithm says, but I'm still a human trader, and obviously there's so many flaws that come with that. I can't execute all these orders at the open as quickly as a machine can unless I put it as a basket order and I just tell them to mark it in, as soon as the market opens, just mark it in every ticker, every option, every strike or something like that. So there's a lot of limitations, and there's just a lot of unrealized profit that's not being made, because I did not make anywhere near close to $10,000 on Friday, and I didn't trade any of these things. As I said, I only traded Zoom. So after I did this evaluation, it's really got me thinking, what's going to be my approach for Fridays? Am I going to just have a fixed, we'll say $1,000 risk that I'm going to use every Friday, that I'm just going to divide up amongst all of the tickers that the algo says, or maybe I'll choose half of them or so. I'm still figuring that out. I'm sharing you guys the data as I'm figuring it out myself. My gut tells me that this is probably in the future what I'm going to be doing the most of, because I like the idea of going with the out the money, because the return here is usually going to be the greatest on a percentual return, compared to going with the at the money for the following week. It's pretty pricey, and then the risk from an actual dollar amount is pretty high, and I don't like the capital requirement here. And then by going with this strike selection, I'm eliminating the 0-day risk, which means I don't have to worry about losing all of the capital in the same day. And this ends up being a sweet spot, because if we notice right here, holding till close, this is pretty much about half of the max profit from here. But when we look at the difference between how much capital is required, it's not that much more capital. It's not like this one that's almost like a 2 to 3 times, almost 3 times as much capital. It's more like this one, which is only 2 times as much capital, a little bit less than double the amount of capital, and we're getting about half of the return with much less risk. So this will right now be my sweet spot, and I might end up just doing this every Friday. But again, this video is pretty different. Congrats if you've even made it this far. It means you obviously have some sort of a love for, options and data, and obviously you're intrigued by algorithms in itself. I'll be happy to answer any questions if I get any comments on this video, and in the Discord, if you want a preview to Quant Trading App Quant Trading App in itself, just DM me after you join the Discord, or post it in the public chat. The public session, I'm not super available there. I kind of cater mostly to the premium members, which will be the gold membership. But this is in a sense what the Quant Trading App backend looks like right here. And these are all the tickers available on it. It's not an algo that scans the entire internet. It's focused on a very select few tickers. This is the proprietary scanner, as of which I mentioned. We have, if I were to press right here, this would be the charting platform right here. And as you guys can see, this is Friday, how we ended up closing. It was same stuff, same screenshots in which I showed you from Thinkorswim, but we have this available here, and it tells us certain levels and what to expect at these levels and things like that. Thanks for watching, guys. Again, congrats on making it this far, and I'll catch you guys in the next one. Peace.